with eyeballing support and resistance. Okay, I'm going to try again. And hopefully you guys are hearing me all right. I have a couple of people. Well, it seems to be the same people. Hold on a second. Okay, guys, I rebooted everything, and hopefully you'll all hear all right now. Like I said, please, if you can hear, write in your questions, because it shows everything on my side that everybody's hearing all right now. So let's get started with eyeballing support and resistance. Now, defining or explaining support and resistance is relatively simple. When discussing in the context of the market and online trading, it defines levels at which buyers and sellers step into the market, or where the law of supply and demand comes into play. All this makes it a little bit complicated, but if we understand that when the markets move in peaks and valleys, peaks and valleys, peaks and valleys, peaks and valleys, peaks and valleys. Whether they're going up, even if they're going sideways, they go up and down, up and down, up and down, or they're going down. Each one of these prices, or these peaks and valleys, are reached for specific reasons. When a price is moving upward steadily, it's making higher highs and higher lows. When a price is moving down steadily, it's making lower lows and lower highs. When a price is moving sideways or in congestion, it's still finding a point which it moves up to, and then nobody pushes it any farther, so it goes back down and then moves up to. Or you can think of levels of support and resistance like steps on a ladder. Whether you're going up in price or you're going down in price, you're going to eventually step on the same step. And tomorrow, when you go up that ladder, you're going to go on those same steps. And when you move that ladder to the house down the street, because your neighbor borrows it, he's going to go up and down those same steps. And last summer, when you painted the back of the house and you use that ladder, you use the same steps. That's what happens with price. Price, when it's in a specific area, has the same kind of steps. Okay. And these levels are like those steps that we can see, and these are called support and resistance levels. Now, the first thing I want to say is the term support and resistance can be interchanged, because when price is moving up, actually, let's pop up a chart. Okay, give me a second. Let me get a chart up here. So when price is moving up, this level that was strategically important before, or this step on the ladder that was important for you climbing up to the roof, okay, is when you're stepping up, is supporting you as you're going up. When you're coming down, you're stepping on that same step again, but what's it doing? It's resisting you. Okay, they're the opposite because you're one point you're going up, the other point you're coming down. So it's interchangeable. As long as you know what the level is, that's important, it's the same level. So when price is moving up, the point where it gets congested, okay, is resistance. But if price had, see, we're here, it went right through the resistance, but when it started moving back down, it came to that same level. And what is that level? It was support at that time. So that level stays intricately important. So don't get too overly involved in the word support and resistance. Just call them levels, just call them steps, because that's really what they are. They are important prices, or in prices that are important to the markets, going up and going down. In other words, we know gold is one of the key psychological levels of gold is 1800, 2000, 1500. So when price is moving up and gold is down at 1450, we know that 1500 is a resistance level for gold. It's not saying gold's not going to go to 1600. It's just an important level that we should be paying attention to. In other words, when you're stepping up that ladder, and I'm an old guy, I step on every step. Well, maybe my grandson's running up that ladder and he goes up every other step going up there, or the tall guy steps. So they're just important levels, but they are very critical levels. And they are very important in reading price, understanding where to put your stop losses, defining entry points, and understanding and being able to interpret what the market is trying to do and levels that you should be important. Look, here we have, and this is just a sample chart. It's a live chart, but this is my teaching chart. Look at this. We have Euro US dollar. Now here we have some fairly well-defined levels, and look at what the Euro US dollar is doing. Moves up to resistance, bounces off, comes back down, bounces off, comes back up, goes back up, comes back down. Well, as price moved up here and bounced down here, we knew that it would come to this, we could predict it would come to this level, and then it came down to the strategic level, came back up to that level. Look how important. Now, it's not saying that the price couldn't go up here through it like it did here, but we want to be aware of that level. Because if it bounces through, it's probably going to have the momentum to carry it to the next. If it doesn't, it's going to come back to the other. So a very important trading strategy is trading between, when you find a market that's doing that, between support and resistance, you can get a lot of trades in, bouncing off of one down to the other, bouncing off the one down to the other. But isolating these levels of support and resistance are very important. Now, there's many ways that we get, or traders get, support and resistance. A lot of them are mechanical, mathematical. Fibonacci retracement levels are levels of support and resistance. You can get support and resistance using moving averages. You can get support and resistance using what's called pivot point calculations. But all of these are numeric calculations that everybody has. Okay. Eyeballing is one of the ways that makes you better and more aware than the guy sitting across the world from you, the guy sitting across the hall from you. The more trend, like trend lines give us support and resistance. Okay. Chart patterns give us support and resistance. But these are all kind of standardized. This is the only one. And what it does, eyeballing, is a method of looking at your charts. Now, support and resistance are, because these are those steps on the ladder, each set of these steps are only important at the price level where that asset is trading. So in other words, if you have a 3-foot ladder, a 6-foot ladder, a 9-foot, or say you want to have one of those big extension ladders, okay, knowing where the steps are when using 3-foot, knowing where the extensions are when you use the 6-foot, knowing where the steps are when using the 9-foot, they're all slightly different. But once you know where they are, they're there forever. So the first time, look, I'm not a guy who's pretty good with tools. I'm not a guy who likes climbing ladders. You know, today I had to fix something on my glass on my patio and put some acrylic in there. And let me tell you, I made such a mess. I got the acrylic on my shoes, on my hands. I'm not somebody who's good at that. So I'm a guy who's gonna get the ladder. I'm gonna hold both sides of it. I'm gonna watch my feet, and I'm gonna climb up there easily. But you know, when I've been up and down that ladder 3 or 4 times, I kind of can then just move up and down easily without looking at my feet, or I can climb steps pretty easily. You know, everybody's kind of different. But once you have it down, you have it down. So support and resistance doesn't come from today's trading. Support and resistance levels are brought forward from historic prices, and they are valid every time that the price is trading in this same range. In fact, the more times it's moved in that price range, like the euro is about 113 now, 112. Okay. When it was at 108, we didn't care about what the support and resistance levels were at 113. We cared about what they were when they are at that price range. So as you can see, as I'm pulling my chart back and prices are falling down lower, okay, you can see my support and resistance lines that were drawn on there a while back when prices were trading at those lower levels, because that's all that was important to us at that point. Okay. So once you've defined and drawn them on your charts, whenever price moves back to those levels, they become important again. So I'm not constantly I'm defining and maybe updating or looking at my levels of support and resistance that are close around the price I'm looking at, because maybe I want to add some more, because maybe there's a price that's strategically important right now in the current range of the asset. But otherwise, I'm not paying that much attention to it. Okay, you're not constantly drawing them on your charts. But once they're there forever. Okay. Now somebody just says, how far back do you go? It's not how far back one goes. It's once you start drawing these on your charts, they're just moving forward. I'm not going back in history and going back to 3 years ago to start putting lines on my chart. I put those lines on my chart 3 years ago and they're extended forward. Now, if you're a beginner and you don't have any of these lines, you should go back and at least when this asset's been trading at that price range in the past, because you can isolate them. Your eyes get pretty good at isolating them. All you're looking for are levels or price points in which price has been at this range and found a critical area in which it moved, in which it stopped. In other words, maybe you have several tops or several closes at a particular level, or you can see price fell down and got stuck at that particular level. And then, now my color coding on my charts is personal. Okay. It's not something I'm going to teach you. It's not something I'm going to share with you. It means something to me only. Okay. because when I draw them on the charts, I give them keys, and I know what colors I use. I know what dashes and dots I use because it tries to tell me how old that line is. I try to tell myself how important that line is, how many times in the past was it stopped at this price. So like here, we're going to go this gold line here. Okay, if I bring my chart back and I want to go all the way back, look how important that price was, you know, a month ago. We can go back farther and farther and see how important that. So I didn't change the colors. I don't change my line. I changed the color of the line to tell me something. But this is personal. There is no rule about this. There's no law about this. There's no chart about this. This is what you do as a trader to make it important. So when I look at my levels on my chart that are around my current trading, okay, I know how important those levels are. I know that they're old, but I know that they've held well, or I know that they're important to me because all your support and resistance levels have value. It's how much value are you going to give them in today's trading. So if we look at this, look at how this green line, which comes way back in the past, but look how important it's held. Look what happened in today's trading based on a line that was drawn back on there maybe a year ago. That told me something as this price was cascading down that I need to be aware of the 116.69 here and look what it, because it's not a miracle. It's not magic. These are prices that other traders know and prices in which traders will tend to enter or exit markets because they're looking back at their charts also. Okay. And doesn't mean, like I said, doesn't mean the price couldn't have just gone right through there and continued down. But it would have told me if I had shorted this asset and it was coming down, that maybe I should be thinking about getting out at that point. Or maybe I'm looking to see, is it going to keep going through and the downtrend is going to continue? Or maybe now if I was at shortness, maybe I'd be moving my stop loss a lot closer. Or maybe I'd be getting ready to exit the market. Or if I was looking to buy into a market and I saw it come all the way down here, this major support line, not be able to break through, or major resistance line, not be able to break through and then bounce off. I'd be sitting here, if I was looking for a reversal, I'd be sitting here waiting to see what happened next. Now, let's go back to my PowerPoint for a minute here. Now, I'm going to show you in a second. I've actually prepared it in a little video presentation because I sped it up because finding these could be very boring and very long about. So I did it in a little video for you to show you how to do it step by step. But let's get back to my PowerPoint first. So remember, the first key is keeping in line and telling yourself that these are just price levels. Demystify them. Don't get involved, like I said, in support and resistance. Just they're ladders or steps on a price's journey. But they're prices where we would look for breakouts. Now, here's an example chart. Okay. Now, didn't we just see this almost exact same thing on a live chart? Now, if any of the concepts I talked about seem complex and confusing, don't worry. With time, you'll find that they are simple to understand and apply. Most of the complexity is just due to a lack of familiarity. This is not rocket science. It's basically what I would call experience. It's making, the nicest thing about eyeballing is it forces you as a trader to look at price and to work with your charts, with your paper on hand, and look at your charts and look back historically and look at how price, and make yourself familiarized with how, just like the ladder. The first time you climbed up the ladder, you watched your feet very closely. By the fifth time, you're able to run up and down those steps because you knew where they were, you're familiar. And too many traders get themselves wrapped up in indicators and oscillators and all this other stuff, and they don't get a feel for the asset. I can't tell you how many traders don't put trend lines on it, don't put support and resistance. Every chart I have has support and resistance on it. I don't do anything that doesn't have support and resistance because, like I said, it made me familiar with the price, the historic price, the asset's personality, and those lines, when I drew them on the charts, told me something. And when I look at them on my charts, I remember what I looked at. So remember, these are just not random prices. There are prices in a journey that price has reacted to in a uptrend or a downtrend. Okay. You want to look for tops and bottoms, whether you're using candles, whether you're using bar charts. Okay. You want to find places where prices stopped for a second, not stop forever. What a price that was important in that journey. Now, don't all these levels look just like the steps on a ladder? So once we've combined them and put them on our charts, we can then look for them moving forward, because you remember, you can only trade to the right, but understanding what you're trading comes from the left. And no matter who's explaining to you, it's the only explanation. Yeah, you can get all kinds of literature. You can get all types of complicated information, all this stuff about supply and demand and market formulas. And it just comes down to looking, and this is why it makes you better than the guy across the desk from you, because this is personal. It's getting you to make your own decision, not a mathematical calculation telling you to do something. So look long and be careful. Okay. Now, eyeballing is my first step, because technical analysis is not an exact science. It is useful to create these support and resistance zones. Now, a zone, okay, that the step on our ladder is wide. Okay. To say to yourself, my support level is at the Youre 113,621, it doesn't work. It is a price level. It is a zone. Now, my head, I draw these lines on my charts, but in my head, mentally, okay, I'm giving 5 points above and 5 points below, because I know I haven't, first of all, I haven't actually drawn this line on the chart exactly at the opens or the closes of a particular asset, and they're a range. I also know that we're trading 4 digits to the right, 4 pips all the way to the right. So these numbers are minuscule. So some people do better by drawing them on their charts like this. Now, this is not two different prices historically. These are just a range from it historically. When you drew them on, that you could say this is your range. Because very rarely, if you have a line that's exactly at a pip, are you going to get it exactly to the point? So let me show you, like I said, let's go back to my PowerPoint. I'm going to show you this little presentation I put together for you. It's a slightly animated presentation, so it'll move through pretty quickly to explain to you or show you how you would actually do this from scratch. Because I know a lot of you guys are asking me, you're writing into the windows, where do I start from? Okay. So like I said, it's only going to take a minute or two, but it'll show you how to do this from the beginning. So hold on, let me bring up this presentation. Let's see if I can get it all started correctly for you.
Okay, so here we have the daily chart of the FTSE 100, and as you can see, currently the price is up at the 7,300 level and has spent the last couple of months around the 7,000 level. Now, to demonstrate how to identify and plot support and resistance areas, I'm going to scroll back on the chart to the last time the price was in the same region as it is now. This way we can use the support and resistance areas we plot from the previous price action to see if they have any significant impact on this price action that's happened over the last few months. So I'm going to draw two red lines, one above this price action and one below, very quickly. There we are. Now we want to scroll back and find the last time that the price was between these two lines so we can use it to identify and plot the support and resistance areas for this price region. So if we scroll back, we find that the last time price was in this particular region was sort of December, January to August 2016. So in order to start plotting the support and resistance areas, we first need to identify where they are. And as I said in the video previously, we need to spot the points where price has had a significant reaction. And to do this, we want to find where price has either been heading in a particular direction, has stopped and reversed, like here, or where it has stalled for a significant amount of time before either breaking through a particular area or reversing. So this area here, for example. And to plot these areas, I'm going to take my circle tool and I'm just going to first pick out all the reactions that I can see on this particular region of price action. So as I said before, I'm just picking out all the reactions where price has either reversed or stalled, and I'm just highlighting them so I can see them more easily. Fantastic. Okay, and now to plot the areas, I'm going to take my line tool and I'm going to work my way down the chart until I come to a reaction point. So the first reaction point I come to is this one here. And I want to encapsulate this reaction with the two lines. So I want to take the highest point the reaction occurs, and I want to try and place my line at the lowest point where the reaction occurs. And then once I've done that, I can delete my circle. So here we have our first support and resistance area. And then all we're going to do is work our way down the chart, picking out these reaction points, their lowest and highest levels. Another one here. Another one here. This one has more than just the one reaction from it, which is fantastic as it gives this particular area a little bit more weight in future use. As we come down a bit further, we've got this one here. So there. Actually, this one could probably come a little bit lower and encapsulate that reaction as well. And then we've got one down here to there, got another one here to there, and then we've got another one here to there, and then we've actually got another one here to there. And then we can delete our circles, as all of these reactions should now have been encapsulated in the areas that we've drawn. So that one has, yep, yes, 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 and yes. Now you may have spotted.
Okay, so that gets you started in your route. Now, I start, depending on how you trade and what type of trader you are and what area, I start with a 1 to 2 hour chart. I do that process to get my first group of lines on the chart. Then I go to my 1 hour chart, because don't forget, each time you're getting more opens and closes, and I'm going back and adding more lines because it's giving me more information. And then I'll go over to my half-hour chart, and because that will keep defining the fields in. But remember, once you have them all on your chart, you don't ever have to draw them again. They're going to be extended forward throughout your history. So it takes a little bit of time to get them on your chart. But when you got around your asset, you'll find, oh, 3 months from now, when that asset's climbed back, say Bitcoin tries back to 50,000, all those lines you drew the last time when it was between 45 and 50 are there and they're valid. They remain valid. So that's it. Once you've built your chart, you have them. So look at a 2-hour or 4-hour chart to start, then add the same thing and add more on for a 1-hour chart, and then add them on for your 15-minute chart, because those lines will remain on whatever chart and whatever you're using. But then you have more definitive lines and more fields, because you want to get them very tight. You don't want big broad range. You don't want, say, again, Bitcoin at 45,000 and your next level at 46,500. You want to define these important levels, because we're trading, our type of trading is in short-term areas, and we're looking, what's happening next 15 minutes, next hour, next 2 hours, when we're going to enter the market, when we're going to exit the market. So the more time you put on to this, the more valuable it is. But identification of key support and resistance levels is an essential ingredient to successful technical analysis. And you'll find you can test how well you're doing, because when I look at my charts and I drop on, say, some Fibonacci levels on an uptrend or downtrend, I find out, look at that, they're right over other support and resistance levels that I drew from eyeballing. Okay. Or I'll see that my moving averages or my trend lines are crossed, and they give more value and support because I see how accurate my support and resistance lines are. These levels become important. So the more things that hit across them, I'll see a chart pattern. And when I look at a chart pattern and I see a breakout of a triangle, I need to be able to evaluate where it's going to go, where my target should be, and where I would put my stop loss. Well, my target would be up to the, moving towards the next level of resistance. My stop loss should be right at a point of resistance. Hold on 1 second here. Okay, a lot of people ask me, I told you in the beginning of the class that if you want to see a copy of tonight's class, you can do so in about 24 hours by using the same link used to come to this class. A few of you have also said you're having hearing issues. Since hundreds of people out there can hear and just a few of you can't, those of you who aren't being able to hear or can hear me now, whenever you lose sound, it's usually on your end, and you can just sign out and sign back in and you should be okay. Because all the sound checks on my side are telling me everything is okay. But I'm sorry if there's a problem, but you'll be able to see a recorded version of this, like I said, by using the same link used to come to tonight's class. So another great way to find support and resistance level is to mark levels in the past where price had a difficult time breaking through. As price moves up and down, each level that price is bounced off of could be a level in the future that price bounces off again. Now, this is a manually intensive method. It takes time to draw on all the currency pairs or all the assets you're trading. But in the long run, it's going to pay off. So we've taken a look at some of my live charts. Let's go bounce back over to them again. So again, looking for these It's not a big secret. They're not hard to find. Looking and just finding prices that have been strategically important. Okay. And you can because when you can put a line. I mean, you're putting these on mechanically. You can put a line on your charts and then say, oh, look at that. It's not so valuable as I move forward. It was only, had no validity anytime after. And just take it off your chart. So you have, but there's many ways that you can combine these levels into making smart trading decisions. Here you can see the example here. Here we have a beautiful, well-formed triangle. We got a breakout here. And look, the lows came all the way down to this strategic level of resistance. Okay. And then bounce up. Could we get in a trade there? I doubt it. But then look at that. We got our uptrend. We could see it going through each one of these levels, and each one of these levels actually were critically important in that move. So we can see a reversal in trend, as we see here, We can see it stepping up the ladder. And as we make our chart, see, they stayed on our charts. These levels didn't go away. Now I switch from a 1-day chart over to a 1-hour chart. And these levels stayed important, but these levels, look how big and broad they are. So what we want to do is go in between somewhere and add additional price levels. And eventually we have a chart that has all of these levels that gives you some information and helps you interrelate with price action on your charts. So just remember, the more times a price bounces off support or falls back from resistance, the stronger these support and resistance levels become. And that's why, like I mentioned to you in the very beginning, a lot of times when they're on, and I use my color codes, because I'm going to go back and I'm going to constantly refresh. I'm not going to change those levels, but I change the colors of my lines, or I use dots and dashes to tell me how valid that point is at this time. Okay. So when I drew this line on, maybe I can see lots of bounces off it. So it's become a significant level. So I change that to a bright gold and get rid of the dashes and the dots. I see another level that I've had on there for a long time, and price has never stopped on it in the last year, but 2 years ago was significant. I'll change it to small little dashes because it tells me something when I'm looking at these. So the more those historical patterns repeat themselves, the more traders know and the more confident they become in forecasting the future behavior of an asset. Some prices become so entrenched in this trading range that the asset eventually has a hard time breaking through the level, either to go up or go down. Now, imagine here's a stock. Okay. It trades over the last year in a range of, say, 35 to 42. But every time it gets to 42, it falls back down. Okay. But we know that when it falls back from 42, it goes down to 40. Now, it either gets stuck and bounces back up to 42. If it goes below 42, it usually comes all the way back to 38.50. That's told you a whole bunch that you want to look forward to in the front. So if you're going to look for a trade, maybe you say, okay, I think there's going to be some good information, but I'll buy at 38.5 and I'll stay in the market to 42. And if it breaks 42, it's going to continue going up. It's telling you something. So understanding the concept, support and resistance, trading ranges, breakouts, breakdowns can be quite valuable to all traders. Support and resistance is one of the strongest and most dependable tools available to the traders. Remember that it is best to use any tool along with other indicators when deciding whether or when to take or exit a position. Support and resistance analysis is an important part of trends because it can be used to make trading decisions and identify when a trend is reversing. For example, if a trader identifies an important level of resistance that has been tested several times but never broken, he or she may decide to take profits as the share price moves towards this point because it's unlikely that it'll move past it at this level. And then keep in mind, just in the back of your mind, we have what we call cycle levels. And these can be just as important. And these are critical level support and resistance that you should include on your charts. For instance, we know for the euro, 106 is the lowest it goes. So 106 is a critical level. We know in our current trading, 115 is a great resistance. We know 120 is an important psychological level. So you want to include those on your charts because those are critically, like I said in the beginning, when you talk about gold, we know that 1,500, 1,800, and 2,000 are critical levels for gold. We talk about Bitcoin. We know 50,000, 60,000, 39, 36 are critical psychological market levels, and they should be included on, but they're just psychological levels. They're not necessarily levels or prices where the asset stops trading that you'll see in your charts in short term, but they do have critical response levels in the markets. Now, keep in mind, I mentioned pivot points. Pivot points are a mathematical calculation. I pay no attention to them. I don't use them. But most experienced traders will be able to tell you stories about certain price levels that tend to prevent traders from pushing price up of an underlying asset or pushing them down. Okay. So it's very important to keep that in mind. And it's very important to use these to determine your profit levels, your stop loss levels, and make final determinations if you're going to use it to enter exit a market. So keep in mind, you always want to use these in conjunction with trend lines. Okay. And remember, they're reversible. They're like that reversible jacket you have. You can flip on one side, flip on the other. It's still the same jacket. Okay. So as price is moving up, this critical level was your resistance level. When it's falling back down, it's your support level. The more times it retests this level, whether it's going up or going down, the more times you've seen price halted at that level, the more important that level is to your trading. Now, an old saying about support and resistance is volume reinforces. Okay. Volume is a tricky thing because in today's charts, we show volume on Forex trades, we show volume on all CFD trades, but those volumes that you're seeing on the charts, it's the only place that we have real volume is from the stock market or from the commodities exchange. When you're looking on a CFD provider, when you're looking at most, what you're seeing is the volume through that liquidity provider. So it's not actually overall market volume, but it does kind of reflect what the overall market is. And then time matters. Of course, when a price was critically important 3 years ago, may not be as important it is today. And that's why I said I go back and change my colored lines. So support and resistance levels are key mile markers in an asset's progress. Whether you're developing trading strategies considering these points on a graph, doing so will help you set profit targets, prevent frustration, and will help you spot reversals or retracements. So thank you very much. I'm sorry we had some volume issues or sound issues. Hopefully it won't be on the recorded version because it's recording directly from my mic. And if you want to listen to the recorded version of this class, you can do so in about 24 hours by using the same link used to come to tonight's class. Okay. We've had lots and lots of questions in tonight, and somebody will send you answers to all your questions. I think I've answered most of them in the presentation. There's a few people that ask very personal questions, especially what assets would you be trading now? What assets should I be trading? Okay. These are things that we cannot give you. We are not an advisement service. As a regulated provider, we can provide you education and information, but we can't give you investment advice. So thank you very much for joining us tonight, and have a great trading week. And remember, if you have any questions, just type them in and I'll keep this window open for a few seconds. And somebody from our analyst team will definitely send you an answer. So thank you very much and have a great trading night. Bye now.